Howdy, everybody. Welcome to Liberty Call for Tuesday, February 18th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a pretty nice day here in Colorado. It's a little overcast, but we got some sun. It's not too cold. Sorry I didn't do a show on Friday. I had a doctor's appointment with an allergist, and it was at, it was after or right around the market close. By the time once I was in town, I went and ran some errands and did a bunch of stuff. So by the time I got back out here to the Dahlman homestead, I just didn't feel like doing it. So my apologies. Anyways, yesterday was a holiday for President's Day. Hope everybody enjoyed the long weekend if you had one. I don't get a lot of long weekends or Mondays to spend the day off with my wife. So that's what I did. We went and hung out in town. So anyways, all right. Well, markets are down slightly as investors navigate Fed policy signals and trade uncertainties. The S&P 500, Dow, and NASDAQ are all in the red with tech stocks feeling the heat. Well, actually, the Dow might have finished in the green. Intel is soaring over 11% on merger rumors with Broadcom and TSMC, while Tesla slips on delays for self-driving approvals in China. Meanwhile, Vanguard's VOO has dethroned State Street's SPY as the largest ETF, and investors are going all in on holding their lowest cash levels since 2010. Plus, the Bank of England is hoping for calmer bond markets amid U.S. tariff concerns. But before we dive in and break it all down, I need some help from you. If you give me some thumbs up, a like, share, subscribe, follow, and press the notification bell. All right, well, now we're ready. Where's my charts? Okay, here we are. All right. Excuse me. All righty. Starting out with the Dow Jones, it actually finished in the green by 0.02%, 10 points, closed at 44,556. S&P 500 also managed to squeak back into the green by 0.24%, 14 points, closed at 6129. NASDAQ at up 0.07%, 14 points, closed at 20,041. The VIX was flat today. It's currently holding at 1537. Let's see here. Canada was up 0.65, Brazil down 0.96, and Mexico up 0.52. Headed over to Europe, Germany was up 0.29%, the UK down 0.01, France up 0.21, the Netherlands down 0.16, Spain up 0.98, Italy up 0.59, Switzerland up 0.22, and Portugal up 0.97. Russian exchanges both in the red today. The MOEX down 1.49, RTSI down 1.39%. And the overnight markets, the Nikkei in Japan was up 0.28%. Australia down 0.2%. New Zealand up 0.19. In China, the Shanghai was down 0.93. Shenzhen Component down 1.61. China A50 down 0.1. DJ Shanghai down 1.14%. And the Hang Seng up 1.59. And the Taiwan weighted up 0.68%. All right, so that's everything there. Let's hop into our weekly economic update that normally comes out on Mondays. Stocks advanced last week despite some intra-week volatility as investors showed concern about the economy's strength. The S&P 500 gained 1.47%, while the NASDAQ picked up 2.58%. The Dow Jones Industrial Average added 0.55%, and overseas markets added 2.53%. The Fed is in, quote, no hurry. Stocks opened the week higher, quickly discounting news that the White House would impose 25% tariffs on all steel and aluminum imports. Tuesday was a volatile session, punctuated by comments from Fed Chair Jerome Powell, who told lawmakers the central bank does not need to be in a hurry to lower interior rates further. Stocks opened lower Wednesday after a warmer than expected update on consumer prices, but stocks showed some resilience and rallied throughout the day. The NASDAQ managed to claw back its losses before Wednesday's close. On Thursday, the White House announced a plan for reciprocal tariffs, levies on goods imported into the U.S. from countries that impose tariffs on U.S. exported goods. But markets rallied on the news that the administration would pause tariffs until they determine how much to levy on each country. Stocks took a breather on Friday, shrugging off a weaker than expected retail sales report. The S&P ended shy of a record close, and the NASDAQ finished the week above the 20,000 mark. Right. Inflation's in focus. The consumer price index report showed prices rose 0.5% in January, slightly hotter than expected. Shelter costs remained elevated, increasing 0.4% for the month. Core CPI, which excludes volatile food and energy prices, was also above the forecast. Food prices rose 0.4%, pushed by a 15.2% increase in egg prices related to ongoing Issues forcing farmers to cull chicken flocks. Energy prices picked up 1.1% as gasoline prices rose. Key economic data this week, Tuesday, is the Home Builder Confidence Index, and San Francisco Fed President Mary Daly is speaking. Wednesday, housing starts and building permits, and also minutes from the January Fed meeting. Thursday, weekly jobless claims, leading economic indicators, and Fed officials Austin Goolsbee and Alberto Musalem are speaking. And Friday, existing home sales and consumer sentiment. Companies reporting earnings this week. Tuesday is Arista Networks and Medtronic. Wednesday, Analog Devices. And Thursday is Walmart, Booking Holdings, and the Southern Company. All right, and that is our weekly update. Let's jump into our market recap for today. S&P 500 loses steam but remains near record highs. All righty. The S&P 500 edged lower on Tuesday, but remained close to record highs as Wall Street returned from the President's Day holiday. The market's focus was on U.S.-Russia peace talks and key corporate moves. U.S. and Russian officials are meeting in Saudi Arabia to negotiate a potential end to the war in Ukraine. U.S. representatives include Secretary of State Marco Rubio and National Security Advisor Mike Waltz, while Russia's represented by Foreign Minister Sergei Lavrov. Notably, Ukraine and its European allies were excluded from the talks, with Kiev asserting that no deal can be made without their involvement. Well, we're the ones spending the money and arms. Let's see here. The meeting follows President Trump's surprise phone call with Vladimir Putin last week, where he ordered his team to initiate peace talks. European leaders meeting in Paris are preparing a unified response, with the EU signaling possible budget rule adjustments to support defense spending. Moving back to the markets, Intel shares surged following a Wall Street Journal report that Broadcom and Taiwan Semiconductor Manufacturing Company are exploring deals to potentially split Intel's operations. Broadcom is reportedly interested in Intel's chip design division, while TSMC may acquire its chip factories. Analysts at Wedbush believe TSMC's involvement could resolve Intel's manufacturing issues. Intel stock has soared 18% this year, marking its strongest weekly gain in 25 years. Other corporate highlights, Nike gained on news of a key partnership with Kim Kardashian's Skims to launch Nike Skims, targeting women's athletics. Constellation Brands rose 4% after Warren Buffett's Berkshire Hathaway disclosed a $1.2 billion investment. And Delta Airlines fell 1% after a regional flight crash landed in Toronto, injuring 18 passengers. Investors remain attentive to ongoing geopolitical developments and corporate earnings as the shortened trading week unfolds. Yeah, my youngest son was flying in, was supposed to fly into Toronto yesterday, and his flight got delayed, so he got stuck in Chicago. So not sure if he ever made it to his destination this morning or not, but I don't think he was real happy getting stuck in a strange city away from his wife and family. So anyways. All right. Well, next up on the docket, got an article here from Zero Hedge. The Fed has stopped pretending that price inflation is going away. Federal Reserve's rapid rate cuts in late 2024 are now under scrutiny as inflation show signs of resurgence after slashing rates by 50 basis points in September, followed by cuts in November and December. The Fed claimed greater confidence that inflation was nearing its 2% target. However, January's policy shift to hold rates steady without any mention of progress on inflation reveals cracks in the Fed's narrative. The latest data contradicts the Fed's optimistic outlook. The Fed's preferred measure, PCE inflation, hit an 8-month high of 2.6% in December. Meanwhile, January CPI inflation jumped to 3%, a 9-month peak. With monthly price growth at an 18-month high of 0.5%, rising costs for essentials like food, which have grown by 2.5%, energy services, also 2.5%, and shelter, 4.4%, highlight the growing strain on consumers. Additionally, wholesale prices surged, with PPI reaching a 24-month high of 3.5%, signaling continued consumer price pressures ahead. Moving on, critics argued the Fed's aggressive rate cuts during the election season were politically motivated rather than data-driven. I'm not going to argue against that. Now, with inflation heating up, the Fed faces growing pressure from President Trump to lower rates further to offset economic impact of his new tariffs. Trump openly called for lower rates, suggesting they would pair with his tariff policies to stimulate the economy. I'm not sure how that works. An implicit acknowledgement that tariffs could slow growth. According to the Mises Institute's Ryan McMacken, the Fed's best move would be to step back from market manipulation, allowing rates to rise naturally, would curb inflation, clear out inefficient zombie companies, and restore normal market dynamics. However, McMacken argues that as a political institution, the Fed prioritizes short-term economic appearances fueled by deficit spending and government pressure over long-term stability. Totally agree. Alrighty. Last up, the Monday Morning Outlook from First Trust, Mr. Brian Westbury's article. This week's is called or titled "The Constitution at Work." So we'll see what he had to say. The size and scope of the U.S. federal government has expanded dramatically over the last century, but recent events suggest a potential turning point. In 1928, federal spending accounted for only 3% of GDP. Since then, various legal and policy changes have paved a way for a much larger and more powerful government. The first shift came in 1883 with the creation of the civil service system, which aimed to reduce patronage but inadvertently laid the groundwork for an entrenched bureaucracy. Then, FDR's New Deal in the 1930s vastly expanded federal power, creating entitlements and regulatory agencies that operated beyond direct congressional oversight. Further centralization followed in 1974 when Congress stripped the president of his abilities to impound funds, removing a key executive check on spending. The 1984 Supreme Court decision in Chevron further empowered unelected bureaucrats by allowing them to interpret ambiguous laws as they saw fit. However, last year's Looper-Bright decision reversed this precedent, making it easier for individuals to challenge regulatory overreach in court. Now the Trump administration is aggressively reasserting presidential authority, particularly in controlling executive branch spending and personnel. This challenges the long-standing notion that once Congress authorizes funds, they must be spent, arguing instead that the president has the right to decline expenditures. Trump's moves could mark the biggest shift in federal governance since the New Deal. If successful, this could redefine the balance of power between Congress and the presidency for generations. Investors and political observers should closely monitor these developments as they have far-reaching implications for policy, governance, and the economy. I just would like to see the federal government go back to living within its bounds of the Constitution, really only working within the jurisdiction that they've been given, which is defense, diplomacy with foreign powers, and ensuring a free trade zone between the states. Outside of that, all the other stuff could be wiped away, and I would have zero problem with it. I'm sorry if some people are going to lose their jobs, but if you're working in an unconstitutional branch of the government, sorry, it's going to go away. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. All right. Well, hope everyone has a wonderful evening, and I'll talk to everyone again next time. Adios.